Next up is treasury stock. We're skipping that. All right, so treasury stock. Treasury stock is stock that a company has gone out into the market and bought back. So it's their own stock that they bought back. Okay, it is a contra equity account, which means that you subtract from equity. Okay, but we are basically skipping. Okay, so you don't really need to know anything about treasury stock. Well, maybe just the definition, but see down here where they subtracted it out to get total equity. Okay, we are going to do cash dividends, and that's it. We are not going to do stock dividends and stock splits. Okay, so we're doing dividends. We are doing cash dividends only. Okay, so with dividends, you have 3 important dates. You have the date of declaration. All right, this is where it's declared by the board of the directors. And it becomes a legal liability on this date. All right, and you would have a journal entry, okay? The journal entry is going to be cash dividends and dividends payable. All right, the second date is the date of record. All right, you must own the stock on this date to receive the dividend. All right, and there is no entry on this day. And 3, date of payment. All right, and this is when the dividend is actually paid. To shareholders. And so that's just dividends payable and cash out the door. Okay, so Smart Touch Learning declares a 5-cent per share cash dividend on 22,700 outstanding shares of common stock. Okay, so on this date up here, let's move that there. Okay, so here are our dividend dates. On May 1st, Smart Touch Learning declares a 5-cent per share cash dividend on 22,700 outstanding shares of common stock. So we're going to have May 1st is our date of declaration, and we're going to have cash dividends and dividends payable. And it's going to be for the 5 cents times the 22,700 shares. All right, so it's just 5 cents times 22,700. All right, on May 15th, there's no entry. And then on May 30th, which is the date of payment, we're just going to have dividends payable debited cash out the door for the 1135. And then, I don't know if you recall, but at the end of the year, cash dividends is closed to retained earnings. And that would be a debit to retained earnings. We did this in Chapter 4, and a credit to cash dividends. And it would be whatever the total was in there by the end of the year. They may have more than one dividend during the course of the year. Okay, let's go back over here. All right, preferred dividends we're not getting into. We're only doing common. We're also not doing stock dividends. Stock dividends are when they issue additional shares of stock instead of cash, because perhaps they don't have the cash, but they want to pay a dividend. All right, I think the last thing is just looking at the equity section a little more in detail. All right, so with the statement of retained earnings that we've done all along, it's, still the beginning balance plus net income minus dividends. But you need to remember in the equity section, where's our equity section? You know what? I'm just going to come over here and do it. In our equity section, on the balance sheet for stockholder equity, you'll now have paid in capital, and under that you're going to have common stock and paid in excess from common stock if it has a par value. All right, and I'm just going to make up some numbers. And then you would have preferred stock and pay in excess from preferred, whatever you might have in there. All right, and you would total those up. Okay, and this would be your total paid in. Then you're going to have retained earnings. For whatever it might currently be. And then those two add up to give you total stockholder equity. And that is what your stockholder equity section is going to look like from now on. Okay, so when you go to take a test, this is how you're going to have to do the equity section. So it's a little more divided up. Before, I think we were just doing common stock and retained earnings, and that was it. But now we're going to have paid in capital with the total paid in capital, then retained earnings to get your total stockholders equity. And that is it for the chapter.